Good evening, everyone. Thanks for your attention. So from East African gold, we're going to go to Southeast Asia to talk about oil and gas. And Coro Energy, we're a much younger company than Shanta. You know, the story you're just hearing from Eric there about a company that has matured into a cash-generating phase. We are very much embryonic. So we are almost a micro cap. I'll give you a bit of an overview of the company. I'm going to talk about this production sharing contract we called Duyung in Indonesia, where we're right in the middle of an exploration drilling campaign. So that's happening right now. We're drilling ahead as we speak, and results are starting to come out. So I'm going to show you what we've seen so far there, what we're hoping to see, why we're excited about it. I'll move on from the other bits in the portfolio. I'll just point them out to you to let you know what we have, but they're basically assets in Indonesia and Malaysia, where we've got activity going on, and maybe dwell a little bit on what's going on in Southeast Asia in oil and gas, because there's a bit of a change in the landscape, and those of you who have followed oil and gas here in the North Sea will recognize some of the changes that we're seeing there and things that we might expect to see in how the independent sector for companies like ourselves, what opportunities might be coming. So Coro, we're quite young, as I mentioned. I've been with the company about 18 months. My own background is as a geologist and a geophysicist. I spent most of my career with a company called LASMO, London and Scottish Marine Oil. They're a big independent in the London market, very international, and as a young lad, they sent me off to Indonesia and Vietnam, where I was a geophysicist for the company, came back to work in M&A. It got taken out by Eni, the state company, state oil and gas company from Italy. And I went into corporate finance, ended up starting a company called Salamander Energy, which we floated on the London market in 2005, 2006, and we sold it in 2015 to Offshore Energy for about $850 million. So that worked quite well. And the founders of Coro, who had a bunch of Italian assets actually, wanted to go into Southeast Asia. So they called me up and said, you know, could I help them build that business up? And that's what I spent the last 18 months doing, is basically from scratch, a little bit of capital, what can we do to build a business? So I'll show you the strategy we're following and talk about some of the highlights of those assets. We are owned largely by retail investors, actually, at the moment. We have two institutions, Lombard Odier and CIP out of Lugano. As I say, we're about a £20 million market cap, so we're very, very small. This is the Salamander playbook. What we do is we're looking for discoveries, so fields in production or discovered, we don't mind, hard assets in the ground, so barrels of oil, molecules of gas. We like the step-out exploration around that, so the next bump along, the fault block on the side of the field, maybe going under the field or above it, that exploration tends to work very, very well. It's what we call small E exploration. What doesn't work very well is what we call wildcat. If you go drilling out in an undrilled basin, chances are you're not going to find anything. You know, for little companies, that's a very, very difficult business model. And you know, in Salamander, we found it didn't work very well at all. So I don't advocate putting Coro's funds into that sort of activity. We do like the surrounding acreage as protection acreage, and if you can operate that, we call it a hub. That's fantastic. What you need to do is build a portfolio of hubs, and some of them will be immature, some of them will be, you know, as you've been hearing with Shanta, very cash generative. You reinvest into the ones that need the investment, and you have excess returns going to shareholders. That's your model. And what we found is we're down here with some of these assets in East Java and in the West Natuna of Indonesia, and we're starting to look in Sarawak of Malaysia. So these are sort of the basins that are starting to form the nucleus of some of these hubs for Coro. So we're drilling right now, as I mentioned, in offshore Indonesia in a PSC called Duyung. Now, the names get a little bit confusing. It's all Bahasa Indonesia, and I apologize for that. But there's a gas field called Mako, and the Mako field sits in this Duyung PSC. So I'll talk about Mako a lot. That's the name of the shallow gas field. These two maps are of the same area, actually. This is Malaysia. You may recognize that. The Indonesian-Malaysian offshore boundary sits here. Here's Natuna Island down there. We're in this area, this block here. And these are the pipelines, the pipeline system that runs offshore. If you look at the geology, this is the same area. Here's our block there. This is the West Natuna Basin. So the dark colors are the deeply buried sediments that generate the oil and gas. And that's in Indonesia. If we go into Malaysian waters, this is the Malay Basin. It's a big production powerhouse for Malaysia. It's where most of its oil and gas on Peninsula Malaysia comes out of. And this has been a massive producer for Indonesia. The West Natuna Basin has probably generated about 30 billion barrels of oil. It's been on stream along many, many, many decades. It's very mature now and actually in quite sharp decline. There's also a pipeline system I mentioned that goes from this basin all the way to Singapore. It's about 400 kilometers away. And that was put in place at 1999-2000. So it's now 19 years old. It's only half full. There's a lot of space in that pipeline system for gas to go to Singapore. And of course, as you might appreciate, Singapore needs a lot of gas, and it is probably the best market for gas in Southeast Asia. If you zoom up onto this field that we're drilling on at the moment, it's called Mako. It's a big area. It's about 350 square kilometers of closure. Now, normally oil and gas fields aren't that large. This is about the size of the M25. We like to say it's just very, very big, and it's very, very shallow. There's several wells all over it. We're involved in 3. This well, Mako South, was really the discovery well. We can call it's not the first well on there, but that's the one that we reference. That wasn't the well we drilled. We came in after the event. We've been involved in the program drilling Tambak 1 and Tambak 2. Now, I apologize, they're called Tambak, although we're drilling on the Mako field. It's a peculiarity of the Indonesians. This is the first well we drilled in the program, Tambak 2. I'll show you what that found. And we're drilling this one right now, and we have already been through this reservoir, and we've announced those results. This one's a little bit different, Tambak 1, because we're drilling on to a deeper exploration target under the field, which is the kind of exploration I like. So it's very low cost. We only have to deepen a well. We've already drilled the appraisal well for this field, so it doesn't cost much more money to go deeper, but we're looking to double the resource size in this area. So this field was given a size of about 276 BCF, billions of cubic feet, by an independent auditor, and an upside of about almost 400 billions of cubic feet. We think, as a result of this drilling, what we've seen so far, this number here is going to move over to the 2C number. So we're going to add probably 100 BCF or more of resources to our mid-case. And that's a huge value addition from drilling these wells. And likewise, the 1C will also go up. So these numbers are all going to go up on the basis of what we found, and I'll show you why. I'm not going to blind you all with science, but this is a seismic line that runs through those 3 well locations. So here is the discovery well. Here is the one that we first drilled. So we've announced the results of this. And here's the one we're drilling right now. We've been through here, and we're now drilling down here in an exploration target, which I'll show you a map of in a second. This is why I like this. It's a very easy thing to see. This big, bright event, that's the Mako gas reservoir. And as you come off the structure, it shuts off. That's an amplitude dies. It's telling you there's no gas. It brightens up as soon as you're in the gas. When you're a little company, you can't afford to drill dry holes. So we want to drill gas wells. And so if we can see things where the seismic is really telling you drill here, then that's fantastic. So we're going to have a quick look at what this found in here, here, and here. So here's the first well that was done. This was drilled before we arrived, and this is the reservoir sand. It's a 7.3 meter sand body. It flowed 10.8 million standard cubic feet a day of nice dry gas. No nasties, no CO2, no nitrogen. Nice and clean. That was a good result. Pressures told us that this thing is developable. So this could form a commercial resource. We then drilled this one and found here a 10-meter sand body at the same interval. So this is the equivalent sand. It's actually thicker than the original well. So we're very, very pleased about that because this was about 13.5 kilometers away from each other. It was a long, long, long way. And the risk was our reservoir wasn't going to be as good quality, but actually we saw a better quality reservoir. We've just announced this one. which we have the rig out there right now. It's drilled through here. We found 25 meters of sand. So that was a massive surprise. We weren't expecting that at all. And we've seen the gas-water contact. So we've got about a 5-meter column of gas in that reservoir on water. Now, we need to know where the gas-water contact is to help define the volumetrics of the field. So that was one of the objectives of the appraisal, was to find that gas-water contact so we know how big the thing is, which we did very successfully. And as the structure rises, of course, what we're going to see is this sand move up into the gas column. So it really helps with your, that's going to add more volume to your field. So we're very, very pleased with that. As I say, it's about we think there's going to be more than 100 BCF of resource adds on the back of this. We're now deepening the well to drill the Tambak prospect. And this is why these wells are called Tambak. So Tambak is your exploration play. And this is a bump that forms the prospect. It's this thing. You see a rollover, what we call a rollover. So it sort of dip reverses there. This little line shows the field. That's what I've just been talking about, this green horizon up here. We're now deepening it through here. And a lot of these things have been drilled. In fact, when I was a young geophysicist in Indonesia, I was involved in the drilling of one of these wells, which was targeting this area, and it failed. There's also Conoco drilled up here and also failed. So you might ask, why the hell would we go and spend money drilling where other people have failed? And the reason is, when you extract the amplitudes from here and put them on a map, you actually get a lot of anomalies around this closure, which kind of look weird. And that tells a geophysicist something's going on in this closure that we don't see where these dry holes have been drilled. So there's some difference going on. And it could well be, it's not the only reason, but a strong reason could be these are gas-charged sandstones. So as we've drilled this already, it's a few $100,000 to deepen the well and go and have a look to see whether this is gas-bearing or not. So we're drilling that right now. We're going to be giving results on that, I'd imagine, in a number of days, probably next week. And that could be the mid case of this prospect is about 250 BCF. And if you recall, the field size itself right now is 270, probably going up to 370, maybe 400. So this is almost doubling the size of the field. This comes in, we suddenly have a resource that's twice as big as we thought it was. So that could add a huge amount of value to Coro. And of course, that's something that the market hasn't really appreciated yet. If you look at our stock price, it's been bubbling up because we're drilling, but actually the amount of resource we're seeing here hasn't really been factored in. What do we do with that gas if we find it? I talked about the pipeline system. Here we are. We're up here. This is the pipeline to Singapore. Here's our Mako field. You can see we're about 14 kilometers away from the pipeline that's half empty that goes to Singapore. Already we have a heads of agreement with the buyer for the gas in Singapore. And they love piped gas. They also import a lot of LNG, but they prefer piped gas because it's got more flexibility around it. So what we want to do is build up the resource base. That gives you a better price when you start negotiating with the Singaporeans. Once you have that gas price, you work your plan of development. That's already been approved by the Indonesians. And then we'd be looking at developing the field. Okay, I'm going to quickly mention these two, not really going to dwell on them. We've got another asset in East Java. You might be familiar with this island, which is Bali. This is the eastern end of Java. We're offshore here. Again, we've got this gas field. It's got about 360 BCF. We've got almost half of it. We're picking up this gas very, very cheaply. We're only paying $8 million for this asset. It's probably worth, many multiples of that. At the moment, you can buy gas assets very cheaply in Indonesia. And what I like about this is the gas market in Java is very strong. So East Java, they've got a lot of petrochemical. They've got power generation. They've just built a pipeline across Java you can tap into, and the gas aggregators will take your gas to sell along that pipeline. So lots of places to put your gas. Also, the field itself, again, has a nice flat spot on it. It's very obvious on the seismic where the gas is. So when we go drilling wells here, we're not going to get nasty surprises. It's already proven. It's got 2 wells already on the structure. As I say, it's got an independent reserves report, and of course, these wells tested quite nicely. So that's the development of Lengo. I'll skip on from that and quickly mention Malaysia. Malaysia, I think, is going to be the big prize for this company. So we've started in Indonesia, but I really like Malaysia. And one of the reasons I like it, it's quite difficult to get into. Petronas, the state company, just don't let anyone in. You really have to work hard to get in through the door. Not like that in Indonesia. They let anyone come. And I tell people my mother could be an operator in Indonesia. She'd just have to write a check, she'd be in. But in Malaysia, very, very hard. We're working with Petronas on this block, SK2A. It's offshore Sarawak, deep water. Not normally the thing I'd like to do with a small company. And I certainly wouldn't be spending Coro dollars drilling out here, but certainly something we could work up and bring in a bigger company to drill on our behalf. But here again, a good gas market. All these gas fields, these little red blobs are gas fields. And they supply an LNG plant called Bintulu, which is just here. And that's, I think, the second largest LNG plant in the world. It's absolutely immense. It's 9 trains. It's just huge. And they're going to have a shortage of gas, as you'll see in a second. We like it because when we look at the data, and it's got very modern 3D seismic, we see big rollovers on it. And what we've seen on this 3D that we're looking at is gas chimneys. We've seen the seabeds being sampled. Geochemical analysis shows you it's got methane in the seafloor. It all looks like this is a very, very large gas-bearing structures on this block. And out here in 2024, this is an industry consultant, Wood Mackenzie, who's showing the supply and the demand around Bintulu LNG is opening up. There's a big hole emerging here. And this is ideal for something like this Block 2A to come and fill. So we're working that up. We're going to be looking to turn that into a license, hopefully bringing a big company alongside us. And that's kind of a valid strategy for a little player, is to act as the middleman here almost and bringing a big player in to help carry our cost and get the well drilled. I've just got a few minutes left on this, so I'm going to talk a little bit about what's going on out there. And first of all, oddly, Southeast Asia's seen some big discoveries, which is really unusual because normally it's a bit of a desert for oil and gas exploration success. But we've seen recently this year 3 major finds in Malaysia, in Indonesia, and in Vietnam, which are the 3 countries we are principally focused on. And they've been made by, oddly, they've been made by kind of quasi-state companies. So Petronas, obviously, has been involved both in Indonesia and in Malaysia, as well as Cufpec and E&I, who's the other player. So E&I have found a big gas discovery offshore Vietnam. Repsol and Petronas discovered, I think, Indonesia's biggest discovery for about 20 or 30 years onshore Sumatra. And PTT, who's the Thai state company, together with Cufpec and Petronas, made a discovery in Sarawak, where I was just talking about, a little bit shallower water from where we are, but very big flagship exploration successes. And when we look at who's coming in and what's going on in those basins, they're very mature basins. The industry's been in Southeast Asia for more than 100 years. These basins are now to the point where they are viewed as being overly mature by the majors, and they are leaving. And what we've seen in the North Sea is, there's been a big wrangle about who has the decommissioning liability. It's not really the problem here because there's a fund set aside for that already. But, you've seen BP, Total, Chevron have just left, and these independents have sprung up in the North Sea to pick up those assets. So there's a big vacuum, and that's what's been filled. The independents have filled that vacuum. And I expect the same thing to happen here. So when you look at the players, Exxon are leaving, Chevron are leaving the region in its entirety. Total's just sold up. Hess are going to go. Petrofac are selling right now. Conoco are going. PTT are refocusing on just selected countries within that region. So they're all off. And interesting, a lot of Americans are going. They've got shareholder pressure to go and look at the lower 48 to frack. And they view this area as being non-core. And when we look at who's growing, E&I is the only major who are actually actively getting after things in this region. Local companies, Medco and Dialog, they're in Indonesia and Malaysian. Neptune's a private equity firm. And new entrants, OMV, the Austrian state company, is come in, and Perenco, a private French. But what we're seeing is the Europeans, the bigger Europeans will come. The Americans, no way. North Americans are out of here, and the majors are definitely off. And that means someone's got to fill the void. So we're going to see a lot of assets come to market in 2020 in Southeast Asia. And I'm just going to leave you with it. This is not my slide. This is Petronas' slide of Malaysia. they're showing that they have, in Peninsular Malaysia, Sarawak and Sabah, over 170 fields that no one has licensed. They're viewed as being too small. Now, the big guys are all off. There is no, really very, very little indigenous industry, independent E&P industry. There's a huge space for somebody to come in as an active small cap operator and pick up this stuff. And this is our number one target. This is why I think for Coro, this is our prize, actually. So I'm just going to leave my last slide, the need for independence in Southeast Asia. We don't really, if I say we're an operator who can develop small oil and gas fields, you are pretty much unique. I mean, there is just no one doing it out there. So I feel we're kind of swimming against the tide a little bit. The majors are all going this way. We're trying to go that way. We've made some headway. We're getting after it with the drill bit as we speak. So it's an exciting time for the company. I'm going to turn it over to questions.
Excellent. Thank you, James.
Okay.
2 questions for you.
Yeah.
First one is when Coro was set up, there was, if I remember correctly, about 8.3 million quid between you and Sound. You had to sell land and recover VAT and refund it to them. Is it all finished?
I believe so. I mean, I think there's a little bit of there's some of the land still needs to go either to be restituted or something, and Sound has a claim on, but it's tiny, yeah.
The main question is, though, is you hit the post with your pop at Ophir, which tells me that you have access to an awful lot more money than a 20 million cap company normally have. Does Coro's future reside on the drill bit or the corporate boardroom?
Oh, that's a good question. Yeah, well, I think Ophir was a bit of a special situation. I mean, the reason is obviously of interest to us because it was the old Salamander portfolio, so I knew it very well. And I think if you remember that slide I had with the hubs that kind of came up the maturity curve, it was all sitting at the top, so it's very cash generative. And I felt, we could take that cash, give it dividends back to shareholders, and reinvest a lot to grow, prune. It's like a garden. You kind of got to prune a lot of it, and then you've got to replant. And so I saw a massive opportunity there. And I think with these bigger assets coming out, the majors, which are also in a similar position, they're all very mature. They're all generating free cash flow. We could do something similar. But you're right. Obviously, you've done your homework. But some of the banks seem quite keen to give us the opportunity to do that.
It just looks as if you've got access to that money. I'm wondering what you're going to do with it.
Well, I think I think on a case-by-case basis they would look at it, and I think at the moment, if we see a very cheap deal, absolutely, if it makes sense to the shareholders, definitely we will do it.
Could you say something about the political stability in Malaysia and Indonesia? I don't know very much about it. I see occasional things about corruption and about terrorist activity, but otherwise I've regarded them as fairly stable. Is that right?
I think that's true. The industry works in some very difficult parts of the world, particularly your West Africas and bits of the Middle East, and I think compared to a lot of where the industry works, Southeast Asia is quite tame, actually. But I would say that also the industry's been there a long time. So Indonesia, which I view as probably one of the toughest places to work because they're very slow and bureaucratic. But they're making moves to try and change that and streamline their processes. But Indonesia, really tries. It never gets it quite right, to be frank with you. You have to know how to navigate the system there. In terms of corruption, yes, it's there, absolutely. What we've always found is, you have to say no, and then you get bogged down and something doesn't work. But if you just sit it out, they eventually give up and move on, and you can carry on as normal. Malaysia is very different. So Malaysia, in terms of the industry, where you work with Petronas, who are also, the interesting thing about Petronas, they're a regulator and an oil and gas company as well. So they have their own major, Charagali. So they absolutely understand what your issues are. So they're very easy to deal with. Now, there was a big change in the government not long ago. Najib was kicked out, who's now going to face trial for massive corruption. And of course, we have Mahathir back, who's 93 years old. He's older than my mother, actually, running the country. But he's a very safe pair of hands, and he's put the old guard back in charge. which is great for me, actually, because the Petronas CEO years ago used to be my client when I was in corporate finance, and he's now picking the chairman. So that's great. But I think dealing with Petronas has always been very, very good. And what we've seen since Najib went, funnily enough, those new entrants, we saw a whole flurry of deals of people coming in. So OMV suddenly signed a $500 million deal the minute that the government changed. I know Perenco suddenly appear on the scene. PTT started doing deals. So everyone suddenly thought this was a green light for them. So I see a lot more going on in Malaysia, a result. But yeah, I think on a global scale, it's tame stuff and reasonably stable. Yeah.
Excellent. Great stuff. I think we'll leave it there. That's great.
Okay.
Thank you, James. Thank you.